because if you've seen what's happened to Bitcoin and the crypto markets in the last 6-8 months, you basically have no money left in your account. If you look at Voyager, who over-leveraged themselves, Celsius over-leveraged themselves. So people, beginning investors or these retail investors, they always feel like they always have to be in trades. They need that adrenaline rush. By the way, that adrenaline rush is emotion, and you don't want that. But there's always another trade. I've never been in a situation where I'm like, I didn't take that trade, and there was never another trade. I guess that was it. Sorry, I'm done trading. There's always going to be more trades for you to take. So be patient, trade less, makes more. Another huge concept that I try to get across to people is that when I was starting out as a trader, I would day trade like 20 times a day.
Right.
And I would generally lose, and the commissions would just stack up, and I would end up costing myself 500 in commissions. Back in the day, commissions were more. But as soon as I started to trade like 2 or 3 times a day, I made way more money.
You don't scalp like intraday scalping, like it goes up, I don't know, 0.5%, you take profits, wait again, 0.5% take profit. Do you do that?
I do that, but I'm just so disciplined, and I think this is important, is that I don't want to be in a stressful situation because that's where emotion comes up. So I'm so strict on the criteria I look for, and this is all stuff that I teach, is that I only probably in an average day, maybe 2 day trades. And those might be in and out in like 3 minutes or 2 minutes or 1 minute, but I'm making $500, $1,000 on each one. So what I like to do is I like to basically look for trades that I'm going to make approximately 10% on as a swing trade, sometimes 15, but again, those would be considered singles and doubles to me. And then just naturally, I'll find those positions that or just naturally I'll be in one that turns out to be a 30, 40, 50, 60% winner. But it's the consistency of being able to get 10% out, and you just do that over and over again. And if you can get an 80% success rate, win rate, right? Then that takes care of itself, and you make so much money over the longer term. One thing I'll say, I know you want to say something, and again, that's the result. So I think especially when you're a newer investor or trader, you don't want to use leverage. So there's a point where at some point, I think 2-to-1 leverage is okay, but I've seen it where smaller investors generally use more leverage, and then they go broke faster. And you need to learn how to walk before you learn how to run. And I think that's key, is that you look at a lot of hedge funds, and by the way, hedge funds blow up all the time with leverage as well, but at least they know how to run at that point. Small investors, it's all about get rich quick, and that's the problem. When you use leverage, then it's going to end badly.
Keep things simple. Nothing you do is really that simple, Gareth. You make it sound easy because you've had years of experience and you've lost a lot of money before you got. But what do you mean by keep things simple?
So keep things simple is like there's a million indicators out there, right?
That's it.
I use moving averages, Fibonacci, use a candlestick chart, a couple of other things, that's it. I don't put a lot of other things on the charts because the charts really will tell you what is going on. Remember, every time a candlestick chart forms, it's telling you something. It's either a reversal candle or a bottoming tail or an engulfing. I mean, there are so many possibilities that can enlighten you into what is actually going to occur. And remember, you always want to stay one step ahead. You don't just want to say, oh, well, this is happening now, so let me jump on board. You have to think 2 steps ahead. So those candle formations are telling you essentially what smart money's doing. Like a bottoming tail is telling you, charts at the low, it's flushing out. Oh, wait a minute, it reversed on heavy volume, creating a bottoming tail. There's money buying in, and that's usually a reversal signal. So you want to really start to just eliminate a lot of these other indicators that you can put on your chart. I've seen people use charts, and I look at them, I'm like, I can't even see the chart because there's so many things on it. Keep it simple. Everything you need to know is in that chart. You have time counts, you have the confirmation signal. These are all things that I've created on my own and kind of will be teaching. But yeah, it's amazing how much information you can gather from just a very, very simple chart.
Okay.
Do this example.
Right.
One of the most powerful examples, take a calculator and say you start out with $25,000 and do 25,000 and then multiply it yearly compounding by, let's just say, 25%. So just making 25% a year. See what that number is after 10 years versus if you were a home run hitter, 1 year you made 100%, the next year you lost 50%. The next year you made 100%, but the next year you struck out and lost 50%. And what you'll see is after 10 years, you still have $25,000 if you were swinging for home runs. If you didn't and you just had compounding 25%, you're well over, you're approaching, it's not too far away from $1 million. And so it's the long game. It's the long game. Small investors are always into trying to double, triple their portfolios because they think they have small money. They have to get to big money. It's the best way to stay poor.
Set up for us your mental framework for what you're thinking about before you even place a trade.
Oh, that's great. So the way I go into a trade is, number one, I'm looking for factors, and factors would be technical factors. It could be something else as well, but generally focused on the technical chart factors in any particular trade setup. So what I'm doing is, number one, I don't trust just one factor. One factor, I can tell you right now, 60% chance of making money. To me, I'm not in it for 60%. If I want just slightly lower than 50-50 odds, I go to the casino with my buddies, we get drinks, we have a great night. I know the odds are against me there. I want 70-80% success rate trades. So I'm looking for 2 to 3 factors. And again, it could be a bottoming tail at a major support. I mean, what I teach is all about these different factors and putting the pieces of the puzzle together. So
analyze risk versus reward. Can you give us an example? How do you do that?
Yeah, so that's a huge one. The best example would be let's say you're at support, so you want to buy, right? We want to buy support, we want to sell resistance. If I look at the chart and I'm saying, well, it's at support, and if it bounces 50 cents, it's going to slam into the 200 moving average. If it breaks this level, there's no support until $5 down. So you have to, as a trader, say, okay, well, even if the trade is an 80% success rate trade, so 8 out of 10 times I'm going to win it, is it still worth it to make 50 cents when I could lose 10 times that and lose $5? So there's always this kind of analysis where there'll be some times where it's a great setup and the risk reward will be only subpar, and I'll just say, you know what, not worth my time. And the one thing traders and investors need to understand is that there is always another trade. I'm against leverage trading because I'm finding a trade that fits those criterias. Basically, it gives me a thesis. As long as that thesis holds true, I stay in the trade. That's the most important thing. The other thing we mentioned earlier on is, even if you're buying at a specific level, understand that it could pierce your level by a little bit. So don't put all your capital in that you're going to devote to that trade right at the first start. But leave a little bit, because dollar cost averaging, there's a reason why people like to do it. It makes a lot of sense, gets you a better overall average. And again, when you go all in at one level, your emotional reaction is going to tempt you to do the wrong thing. So the bottom line is 2 to 3 factors on a trade. Know the position size ahead of time that you're willing to commit. All right, that is so important. You can't go in just saying, oh, I'm going to throw 20,000 here, and then, oh, darn, it went behind me. Now I don't feel comfortable with it, but now I got to do another 20,000. It's like, okay, the max I want to do, 20,000, so 5,000, 5,000, 5,000, 5,000. Get into that position that way. Keeps your emotion down, reduce emotion, become a robot, and literally follow the charts, and you can profit for life.